OPEC did it again. Just when you think you got them figured out, they throw you a curveball. Let's break it down in the special report This Week in Oil. Hey, I'm Aaron Kildow with over 30 years of experience in oil trading and analytics, and I'm here to elevate your understanding of the oil markets. So let's break down what happened this morning. Okay, let's start off by breaking down the press report that OPEC released this morning about the increase. So they met on July 5th, they met virtually. They're supposed to meet on July 6th, but they've been doing that lately. They sort of meet the day before. The whole market was expecting a 400,000 barrel per day increase. They added another month to that, so 548,000 barrel per day increase. And again, that would be 4 months worth of the original trajectory that they proposed, where it would be, 137,000 barrels per day going out into 2026, with the goal of replacing the 2.2 million barrels that they had voluntarily taken offline in sort of two steps in April and November of 2023. So they're trying to work those barrels back into the market now, and obviously they've been on a much faster pace than what they told us back in December and what they originally agreed on in April. So that's sort of where this is coming from. The reasons given is they're saying they see a stable global economic outlook, healthy market fundamentals, and what they mean by that is low inventories, and I'll show you some charts on that here in a minute. Of course, they've always said this, but any increase can be paused or reversed subject to market conditions. So presumably, if something changes and the market starts to collapse, they could take these barrels off the market. But again, just with the inertia of these things, it would, it probably wouldn't be done in a day, right? It'd probably take a little bit of time to work that through the system. But their overall goal, or their stated goal in doing all of this, is supporting market stability. So, are they doing that? I guess maybe adding a little bit of bearish pressure to the market, but we'll see. So here are the prescribed levels. Again, this is from the press release OPEC put out this morning, which would add up, if you add all these up versus July, that would give you the 548,000 barrel per day increase. So that's sort of where we stand now. So that puts Saudi and Russia at pretty strong rates, 9.7 for Saudi and 9.3 for Russia. Those are pretty strong levels. So we'll see if they can get those production levels up. A couple articles that I read this morning, people saying they're talking to the officials within Saudi, and Saudi's anxious to get those barrels back to the market. So the Saudis have been the ones that have really taken the brunt of all these voluntary cuts. And for one reason or another, now they want to bring those barrels back to market. So if we look at the orange line here, this is the increases that they've agreed to starting in April. The blue line is the OPEC production levels, and this is all from the OPEC numbers themselves. So this is what OPEC is saying they're doing, what OPEC's telling the world that they're doing. So we still have, a pretty big uplift here in the summer. By the 15th of July, we should have the next OPEC report, and we will get the next month's worth of data, and we should be, sort of up here at 31.5 million barrels or so. We'll see what they actually want to report. As I've said in a couple other shows, if you look at sources like Petrologistics, they have production much higher, and maybe all of this increase is just to try to justify some of that increase in production. But again, this is just going off of what the OPEC is sharing with the market and what their outlook is. Now you'll notice up here, this increase plateaus for November, December. And the reason I did that is because you would only need, after this August number, you only have sort of 2 months of that 137,000 barrel per day increase before you're back to 2.2 million barrels per day. So in other words, by October, they have a chance to already realize the return of 2.2 million barrels per day from April. So that's, quite a big increase, right? To try to jam it all into 1 year. And as I mentioned, they originally thought they'd have 137,000 barrel per day increase and very gradually bring it back to market. But obviously they've changed their mind this summer. And one of the things they're saying is they're seeing low inventories. So let's try to corroborate that. So one source of sort of free oil data is called Jody. Maybe it's not the best source for inventory or for supply and demand, but it is a source. It should sort of give you the right general direction. I would prefer to use KROS, but they don't have refined product inventories, which is something that OPEC likes to cite in their monthly oil market reports and that sort of thing. So at any rate, all this data is coming from Jody, so it all sort of keeps it in the same place. So you can see as the most recent data point is April. Crude stocks are at the bottom of the range, but doing better than we did back in 2022. Refined product inventories across all of the OECD. You can't quite see it here, but they're actually below the bottom of the 5-year range a little bit. So those are new lows for April versus a 5-year range. So going back from the range 2020 to 2024. And then when you combine everything together, the total oil products were actually below the bottom of the 5-year range for April. So is there something to what they're saying? Yes, when you read through the June OPEC monthly oil market reports, especially on the OECD stuff, it doesn't seem like it's so bad. Their numbers are maybe a little more bearish than what we're seeing here from Jody. And again, I'm just showing you OECD, and that's primarily what OPEC likes to talk about in their reports, but they could be branching out into other places as well. So just wanted to give you a quick update as to what's going on. Because the increase is a little bit bigger than expected, I would expect some downside pressure, some selling into the market once we open up again tomorrow night, Sunday night. So just so you know, just so you're maybe a little bit ahead of the curve, this is what's been decided, and we'll see where we go from here. Again, one story I read, sort of going back here a page, said they would try to do another increase of 500 or so at the next meeting, which would be August 3rd. Well, they're saying the meeting will take place August 3rd, which means probably August 2nd on that Saturday. But at any rate, 500 would be too much, or another 548 would be too much. They would start bringing back more than the original 2.2 voluntary cut. And that starts getting into maybe more of the core OPEC production cuts or production agreements, that were in place before this voluntary cut. So, maybe that's a topic for another time, but just to make you aware that that's what's going on. And that's sort of where we stand as of this morning. So it has been a big deal. It has been talked about quite a bit in the market. And like I mentioned, the market was pretty much expecting another 411,000 barrel per day increase. So this is maybe a little bit more bearish than what was expected. But again, we are going into sort of max refining demand season. So, I think that makes sense. But anyway, that's all I got for now. We'll talk to you next week. Have a good week. Bye.